Good afternoon, everyone, and welcome to Stock Market Today for Monday, March 9th. It's Alissa Coram here, and some wild swings in the market today, key levels to look at, some interesting headlines and charts to discuss. So, joining me now to do just that is my colleague, Justin Nielsen. Justin, what do you have for us today?
Well, gosh, I mean, besides the whiplash, we'll just take a look at a few stocks that were looking pretty attractive in terms of how they are handling things. So we'll take a look at Teradyne, Caterpillar, and Sphere. So a little bit of everything: industrial, chip, and entertainment. So
Okay, let's do it. And first, let's take a look at the major indexes to discuss what went down in the market today or what went up. We had a
yes,
reversal. Look at that. The Nasdaq finding
you're
support
you're,
right
you're
at
both
the
you're right on both counts.
exactly. The Nasdaq finding support right at the 200-day line, at least for now, up 1.4% on the day. Meanwhile, the S&P 500 was up 0.8% on the day. Didn't come quite down to that 200-day, but a major upside reversal here for the S&P as well. The Dow up 0.5% on the day, and the Russell 2000 up 1.1%. Markets really started moving when news broke that President Donald Trump said that the war in Iran would end, quote, soon. So a lot of movement on that with oil, Justin. I mean, it was getting quite stratospheric here,
Yeah.
but falling rapidly after that commentary came out. I can take a look at an intraday chart here just for folks to see when that news dropped. It was already starting to fill the gap, but then you really saw a big move down on those headlines. So, news driven market here, Justin. What do you make of it?
Yeah, I mean, just wild stuff. And so this is where you have to be very careful because look,
Mhm.
we were talking about this on IBD Live this morning. You know where the indexes were coming down, especially the Nasdaq. It's just that kind of picture perfect area, right? The 200-day moving average line. There's kind of this line of support that it had around 22,500 that it was holding, and it kept on diving below it, but then buyers would come in each and every time for all of these upside reversals. The problem with these upside reversals lately has been they don't stick. You get an upside reversal and maybe you get a few days of progress and then you roll over again. So, one of these times it will stick, but you also have to protect yourself from the case in which it doesn't, because you never know. Certainly over the weekend, and you pointed out how wild oil was. I mean, that's not even taking into consideration the futures market when it was up even more.
Mhm.
Forget intraday, but up
Right.
over the weekend. So just some really wild movements, and this is one of the problems that you have with a headline-driven market. The headlines are coming at you fast and furious, especially the way that the market went. I mean, it was reversing, it was kind of making progress, but it was really an acceleration in the last 45 minutes of trade. So
Mhm.
it's not one of those markets that you really want to take your eye off of if you're still invested. And if you're not invested, if you've gone to cash, and then I think it's still a market that you don't want to take your eye off of because again, there could be a turn at any moment. And while we don't need to get ourselves back in at a bottom, you want to be very aware of what's happening so that if we do get a follow through, if we do get that evidence that the market has turned, you're not caught flat footed. What does
Right.
that mean? It means that you have a watch list ready. You've identified stocks that have been holding up. And in a case like this, you might be identifying stocks that maybe came down to their 50-day moving average lines
Mhm.
and got support. It's a little bit sometimes hard to be buying on the weakness, but when you start seeing the bounces
Right.
and take that step back to the overall trend that a lot of these stocks and indexes are in, even like the weekly chart or a monthly chart on the Nasdaq, it's a very different picture. Kind of this sideways action. Really kind of looks more like a consolidation of this longer term uptrend, and that doesn't look quite as bad, right?
Mhm.
It's certainly not the wiggles and wobbles that we feel on a daily basis. So again, I think the big thing here is you've got to be careful. We have been in a sideways market, and while there were a lot of temptations before because of things that were working, the last couple weeks kind of turn that around where just a lot of things weren't working. The things that were kind of coming off the bottom and looked really bad. So now we'll see if we can get a reset here and get a normal normal type of rally eventually.
hmm And on this weekly chart of the NASDAQ, you can see the black line, the 40 week, so 200 day on the daily, 40 week on the weekly. And you can see how important that level is, whether we bounce and it could lead to a rally, or if you lose it, that's when you tend to see a lot more pain, it seems like, Justin. That's what Webby and I
Hmm.
were talking about on Friday's show. So we're definitely not out of the woods yet, but it is really interesting to see the support where we got it, where you have the news line up with the technicals. I do think
Right.
that that is pretty interesting, and we have seen that play out historically. I'm always fascinated by that. Whenever you have those stars align, that can be very powerful, but different scenarios, of course, in each circumstance. But do you think that we are on follow through day watch? So for those who are not familiar, today is day one of a rally attempt, and
Hmm.
we want to see that low hold, ideally a couple of days of progress, and then we want to see a notable gain with volume heavier than the prior session. And then that might be the time to start putting more money to work, Justin, aside from perhaps some probing positions for the risk tolerant here in the meantime. But
Right.
buyer beware.
Yes, absolutely. And one more thing to add there, I'm not sure if I caught it or not, but we generally, as you said, this is day one. We generally wait until day four before we even
Hmm.
look for that follow through day because we
Right.
want that evidence that not only can you hold, but you can hold for multiple days, right? And I always think of it back in the geometry days, right? In order to make a line, you need 2 points. So point one is this day one. Point two is our follow through day. And
Hmm.
if that starts looking like, oh, okay, now we've got a line that shows a potential uptrend, doesn't mean it's going to work, but we at least have something to trade off. And certainly, I think what these upside reversals have given us, and remember, there have been a few of these rally attempts
Hmm.
that have quickly failed. But what this does give us is a area where we know we're
Right.
wrong. But as you said on IBD Live this morning, if we do lose the support area, it's kind of look out below.
So we'll have to be nimble in the meantime, but very interesting action here today. So that's a look at the NASDAQ. Anything else that you want to add on the indexes, Justin, before we move on?
Well, I think again, one of the things that was pretty incredible was the Russell 2000, because the Russell 2000 was down. I think the worst at its lows. It was down, and again, this is not even counting the futures, because the futures. I mean, I think things were all down like 2% or more, except for oil, of course. But the Russell 2000 during the normal trading session, this was down about 2.5%. So for this to go to close up with a 1% gain is pretty strong. And
Mm.
remember, the Russell 2000 was one of those areas that seemed like it was getting a lot of that you know kind of rotation benefit before, but now that we kind of lost the 50-day moving average line, and if you go back to the daily chart on this one,
Yeah.
we lost the 50-day moving average line, and it started coming in really sharply. But here again, we didn't have a 200-day moving average line in this case. But if you kind of draw that line to the left, you see, oh, lo and behold, there's this 24.8068. There's kind of the resistance area from back in October, November. So again, these lines are
Mhm.
they act as resistance at first, and then they become support. So far, what we have had is that buying coming in. I also want to mention that EQAL and RSP, because we were paying a lot of attention to these equal weighted
Yeah.
indexes. EQAL came back not as strong in terms of its move up today, but
Right.
the fact that it was kind of getting above Friday's high, I think, was pretty impressive. And of course, this is the Russell 1000 equal weighted ETF, and RSP, again, not necessarily a huge move in terms of its gain today, but RSP, which is the equal weighted S&P 500, that was also a nice reversal today, and showing up. So again, that does speak to a little bit of breadth, coming in. It wasn't just the Mag 7, although the Mag 7 in this case, if you look at MAGS, that was up over 1%. But you could also see some areas of potential resistance for the Mag 7. Okay,
Mhm.
there's that 200-day moving average line kind of looming as a spot where it might hit resistance. Same thing for RSP. You have the 50-day moving average line in that case, where it's come back up to that line. So now we'll have to see if it can punch up through it.
Mhm. And let's take a look at some of the sector and thematic action out there, Justin. First, let's go to SMH representing the chip sector, up 3.6% today. That's a move.
Yeah, it certainly is, especially after kind of a pummeling last week. It was
Mhm.
interesting. We've been talking about how bad software looked, and IGV has just been in this major downtrend, whereas as has a lot of tech, whereas SMH was really holding up very nicely
Mhm.
comparatively. But last week it was this flip flop where
Right.
SMH was really getting hurt. IGV was coming back from the dead, and it was a big flip flop. But today, certainly, you're seeing more of that power in the chip space, whereas software, I mean, yeah, it was off its lows, but it was kind of a ho hum day and still down at the end of the day for the IGV software ETF.
Mhm. Exactly. So I'll pop that up real quick. Okay, elsewhere, let's take a look at GDX, the gold miners, an upside reversal at a key level here.
Yeah, 50-day moving average line, 100. Remember we did have quite the move here from the last breakout in December, and it really got pummeled again. Silver was worse, but this certainly had its trouble,
Mhm.
as it came down. But gold has looked different. Whereas silver looked like it has, it was kind of broken and had a lot of work to do. This was looking a lot better. And if you look at GDX, which was the gold miners, that actually was getting back into new high territory. So it was able to kind of shake off that ugliness from the start of the
Mhm.
year. And now it's come down to the 50-day moving average line. This is exactly where you'd like to get support. I mean, it did come down fairly steeply, below that line, but we closed above it. So I don't want to
Mhm.
say no harm, no foul, because
Right.
it certainly could cause some harm, but the fact that it closed where it did is certainly encouraging.
Mhm. And I feel like historically you can get some of these, if you're comparing gold to the gold miners, you definitely have a little bit more octane in the miners,
Absolutely.
right?
And
So,
that can work to your benefit, but it can also work to your detriment
oh
depending on
yes.
which way things are going.
Yeah. Okay, let's take a look at Bitcoin. How did that fare as the headlines played out today? Not a whole lot of umph here, Justin. Was up 1.4% on the day, but it's not like this was leading in any way here. It's still trying to find a bottom.
Exactly. So again, I think there's still work here to be done. There is certainly, and we can go to the monthly chart or even put
Sure.
up the
GBTC?
grayscale, yeah, GBTC, that just to show a little bit more history. So,
Right.
look, GBTC shows that there could be more pain here. So it's not necessarily time to get excited, but one of the things that you could look at is where, again, if you draw that line to
Mm,
the left, it is getting kind of support at an area that seems, like you'd want it to get support at. So
mhm.
we'll see on that one.
Yeah. Okay. And we did pull up the USO chart earlier just to show that move in oil still for the month, a very hefty gain, but it has come off quite a bit with the headlines that broke in today's session. While we're looking at this, we also want to take a look at some oil related ETFs. The first being XOP,
Yeah.
the
So
exploration and production.
yeah, very interesting again because we were looking at these, and certainly last week it was all about the explorers and producers. We have three different groups: the Canadian, the international, and the U.S. explorers and producers in our 197 industry groups, and those were kind of the winners last week. Field services, OIH, those were kind of those have been struggling a little bit. They really were kind of taking a ramp up after the Venezuela. Um, issue where Maduro was removed. But over the last couple of weeks, where oil has really moved, field services came in. But look at the upside reversal there on the field services today versus what was happening with the explorers and producers. So
Mhm.
again, it's important to kind of recognize it's not just oil, but the price of oil, but what's kind of the exposure. There's very different movement between the explorers, producers, field services, drillers, refiners, and sometimes the transport and shipping areas, pipelines. So, just be very cognizant of what you own. And it's also important to kind of sometimes separate the oil from the natural gas, because a lot of these groups are oil and gas, and you sometimes need to know which one so that you know where things are going. But just to put some numbers for the move in oil, you brought up USO, which is an oil ETF, but in terms of the actual price of the oil futures,
Mhm.
they got all the way up to like almost 120, I think, overnight. Yeah, I think this was like yesterday evening, they got up to 120, and where they're at right now is 87. That's a pretty
Mhm.
dramatic move in a single day. And again, this is one of those things where you might have been saying, oh, well, this is the slam dunk play. But again, with these headlines, I think you have to be very careful. There's no such
Mhm.
thing.
Right. Kind of what you were saying before the show. Got dunked on or slammed.
Yeah,
So, but not a
we're
slam
right ahead
dunk.
of March Madness, right?
Yeah.
So we'll see how SMU does. I noticed that they're on the bubble. They really kind of came
We'll
came under the
see.
yeah. So
Yeah.
yeah,
But I think, Justin, this is playing because IBD looks at market history. That gives us an edge, right? We know that in these news driven scenarios, and when something goes vertical like this, it doesn't last forever. And so your risk is elevated,
yeah,
especially with something so news driven. So you need to really be careful and manage risk.
yeah.
So, not a surprise to see this happen.
And this is where kind of buying right will solve a lot of your selling issues. Because imagine if you had bought this. I mean, we have a line right there, a line of resistance, that green dashed line. Imagine if you had bought as this crossed that area of resistance, initially, versus if you had bought because you just were afraid you were missing out on the move.
Mhm.
So a buy there on at USO in the 85 area. And again, remember, that doesn't necessarily translate to the futures prices that we're seeing right now. But in that area is very different than buying, let's say, last week as it crossed 100, and you just maybe were panicking like, oh my gosh, this is the
FOMO.
easiest trade ever. And yeah, exactly, FOMO, fear of missing out. And so if you had bought early, you're in a very different position. You could even hold on to this and maybe weather a storm, but you certainly don't have to. And this is also where
Mhm.
selling into strength. Scott St. Clair on IBD Live this morning has mentioned, we were calling
Yes.
him the road runner because he's just being a little bit quicker, not letting things hurt him.
Yeah.
And being quick in that kind of case, taking profits is one way to do
Mhm.
that and survive.
Yes. Okay, let's quickly talk about some stocks, shall we? Let's
Let's do it.
go to TER. This is Teradyne. Look at that upside reversal right at the 50 day.
Yeah. So again, a lot of times we talk about how easy it is after the fact, where, oh, look at these opportunities that you had to buy this as it, based or as it pulled back to the 50-day moving average line. The problem is when these 50-day moving average line pullbacks happen, you're a lot of times not in the mood for buying,
Yeah, the
So
market could look a little treacherous. Mhm.
right, exactly. And when you have all your stocks pulling back, which is a lot of times what happens, that can be a little bit tough. But certainly what we saw here was a very nice reversal, support at the 50-day moving average line. And this is kind of, I think, an area to look at because, some of the bases right now are still in process,
Mhm.
but I think a lot of pullbacks are out there where you are seeing support at either a moving average line, a previous area of resistance where it's getting support, maybe at a previous pivot point. So these are things to look at. If you're, again, you don't necessarily have to be pulling the trigger on anything, but you should be aware of where things are getting support, what things are getting support and what things are
Mhm.
breaking down. And I think Teradyne is certainly one of those, bigger names. It's in the right space, the semiconductor space, as we saw with
Yep.
SMH, how well that was performing. It got above
Mhm.
Friday's high.
Yeah.
So this was actually an outside day, meaning that for as much volatility as Friday saw, this was actually a bigger day. The high was higher, the low was lower, and we closed at the top of the range.
Mm. Well, very compelling here. And I will say, we talked about this on IBD Live this morning. So,
Kudos to Scott St. Clair, who I think
yeah.
was actually, buying this at the lows,
Mhm.
looking for the bounce.
Yeah. And our audience got the scoop early in the trading day on that. Let's go to Caterpillar. So, an industrial name, a little bit of a theme here. Upside reversal at the 50-day in the context of an overall uptrend that's been going back months.
I'm so glad you said that, Allie, because that's an important thing. When we talk about pullback, I want to make sure that people understand that this is not buying on weakness. This is buying on temporary weakness in overall strength. Let's just pull up the daily real quick because I think it might be a little bit more obvious looking at the daily how
This is the
I'm sorry, the
daily.
weekly,
Yeah.
the weekly. So you're like, hey, what?
Yeah, you're good.
um, yeah, so we had that really kind of flat area for a while where this
Mhm.
just really didn't do anything, and then as it came out of this base, really strong move. And look at how that 10-week moving average line has provided support. Now this is the third time. The first time it was kind of like right there at its pivot and
Right.
buy point area, but now we've gotten support three times here at the 10-week moving average line or the 50-day moving average line. And yeah, it's a good look here. So this is in an overall uptrend. You can see that by the slope of your 10-week moving average line. It
Mhm.
got support right where you want it to, and now we'll see if it can follow up on this.
All right. And last but not least, another stock that we highlighted on IBD Live this morning, Sphere Entertainment, a compelling setup with that explosive move a few weeks ago. I'm just going to add some data here. You can see that lined up right with the timing of the earnings report. That was the catalyst for that move. I know you love looking at this sideways orderly action, holding the bulk of that gain from the earnings move, and a new setup that formed here, Justin, over the last couple of days, connecting those highs.
Yeah, so much to like about this. So number one, of course, that earnings report fueled a 20% plus move in a single day. And so of course what happens there is a lot of times you will have folks putting, the analysts putting new numbers in their models and saying, hey, this is valued very differently today than it was yesterday. The company might not have changed, but how it's valued is very different. But sometimes you find that the appetite quickly wanes, and as quickly as it came up it can come down or at least fill in the gap. But when it doesn't, when it just holds those gains, it says, look, the analysts are very comfortable with it at this new valuation. So that's one part. And then I love the line that you drew there because it shows how it got support at the same level. And it's funny how that works, right? As you study charts, you see this happen time and time again. It kept on coming down to the same level, getting support, getting support. And so now, not only do we have that 22% gain on the earnings report having some time to digest, now we're showing kind of these green shoots of life where it's starting to try and make another move higher. Now, we did see that a week ago, and it started basing again, but this is where you can really kind of keep your losses fairly limited because you have, again, a very clear line in the sand where if it crosses below that, you can cut your loss, but you've got a lot of upside potential because we have seen in the past Sphere does have the ability to move.
It sure does. All right. Well, thank you so much, Justin, for that very comprehensive review of a key day in the market. Much appreciated.
Thank you.
And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live. What stocks are going to be the movers, potentially viable, or at the very least for your watch list as we wait for that follow through day? Tune in to find out. Investors.com/IBD Live starting 10 minutes before the opening bell. We'll see you then. And then we'll also see you right back here tomorrow after the close.